I know what the Black Swan's gonna be. Here, listen.
I was watching this Vince McMahon documentary, and in it, and I loved wrestling, particularly when Stone Cold and The Rock and all of them. So in it, there's a term that I'd never heard of called kayfabe, and in wrestling parlance, that represents the unspoken, unwritten, tacit agreement between the wrestlers and the fans about the illusion that's going on in the ring, the suspension of disbelief that what's going on in the ring is actually, we know it's scripted and we know it's a performance, but they ask us to think it's genuine and real.
And so that's what you think this is?
Yeah, we're in an economic kayfabe right now. And it's not just the United States, we're in it in the UK, in France, Greece, Italy, Japan being the biggest of all. It's this economic kayfabe. And the question is after this election, will we have a Minsky moment here in the United States and U.S. debt markets? Will we have a Minsky moment where all of a sudden there's a point of recognition that what's going to happen or what they're talking about is actually fiscally impossible, financially?
A kayfabe. The economy and investors and traders, there is a complete disconnect. There is what is said by the government and is completely believed by investors because of the gains that they're getting. And the reality is not clicking with each other at the moment. Like a wrestling match. It's make-believe. But when you look at it and you put that understanding away and you look at it, it looks like there is a wrestling match going on. But the reality is fake. And that fakeness comes to one area. And we are going to have a Minsky moment. The Minsky moment will be our Black Swan. You've come this far, so consider liking, following, and sharing, because this is some extremely important stuff. Now, this is Hyman Minsky. He came up with the Minsky moment principle. And what he states is a cycle that trading and bonds and S&P 500 and every asset you could think of has a cycle to it. And I believe this, combined with the debt to GDP ratio that the US is going through, is going to be the Black Swan. See, let me explain this to you. The way this works is that in a stage of a bull run, there are speculative finance. So what people are seeing is that the market is giving back good returns. So they start to take out risky credit. They start to leverage because they're seeing, wow, I'm leveraging and I'm gaining more and more and more and more. It gets to the Ponzi finance scheme where retail and other smaller investors come in and they start taking finance because they look at the previous one. Wow, they've gained 30, 40, 100, 200%. So they start taking out finance. And it gets to a point where that amount of finance being taken out is not related to the GDP that the growth of the country is doing or the government and the companies are doing. And that disconnect means that they earn less. And there are moments where these finance companies or the leverage companies or anything that you can think of that involves investing above your means start to ask for that money back, plus interest. So there will be moments where people will sell, where they won't make money, but they'll have to sell more to pay the interest on. And that will move the stock down. And people will sell more because they're not going to be able to pay that finance more and go. And it will fall down like a block of flats. Now, the thing with the Minsky moment, though, is that there are two schools of thought. There's one where the government just lets the economy run away and it crashes and it's healthy for the economy. And there's one where the government bails them out. Now, this is where I come to the Black Swan event. The government so far has been bailing out anything that is failing. You look at the carry trade, you look at the financial institutions, you look at any aspects, look at the border protests. The government bailed them out through just spending. Now, The spending of the US government, according to GDP that's seen on this graph, and this is through a 25 year, 40-year span that you see on this graph, that is what's going to break. You see here in the financial crisis when the Minsky curve comes and then it dips down, the sentiment changes and the finances have to be paid. And where we are at the top, where that big jump up is and the dip down, that was COVID. We are now building that back up. That will be the undoing of this economy and of the markets. That is what's going to happen. And we will have to see whether after this election, after this time, whether the Minsky moment happens, or if the government can pull a soft landing and continue to spend this out. See, what you need to understand is that the only way that this government can spend out of this is by inflating the economy and money, by reducing interest rates, and by spending. That is what's going to happen. That is why I believe the Fed are going to continue to cut and they're going to prolong this further down the road. But mark my words, the moment you start seeing the S&P 500 flatten off and other aspects start flattening off, that's when you know there is a Minsky moment on the horizon. And I believe that's going to be the debt to GDP ratio aspect of the government. Now, how will this affect Bitcoin? Because I guarantee you it's not the way you think. But unfortunately, I've done a 6.5 minute video, so you have to wait for the next one. Believe me, follow me, because the next one is going to be epic. Love you guys. Like, follow, share. Peace.